All right, let's go ahead and move on to the balance sheet. So the very first report that I want to talk about is the balance sheet, and that's the one that's going to contain our 1, 2, 3. There's a couple of different ways you can get to the reports. You can click on reports up here at the top, which is my preference, or you can click right here in the center and click on the reports button. The reason I like the reports over here up at the top and on the left is these are what we call the big three over here on the left. I think our programmers designed those. Typically you need those for your meetings, for your vestry meetings, council, board meetings, whatever you call them in your denomination. And we want to be able to give an accurate picture of where the church stands, how much money is in the bank, how much money is in each of those funds. And so it really all starts with the balance sheet. So let's go ahead and click on the balance sheet options here. And we're going to go ahead throughout the evening and talk about March. We're going to do statements for the end of March 2011. I have data entered into our training data here through probably March, April. And so I'm going to try to keep remembering to go back to March when I show you the different reports. Okay, let's just look at a regular balance sheet. Again, I'm not going to include the zero balances. One little detail I do want to notice here is I'm including the beginning balance on my balance sheet. Now, a balance sheet is basically described as a snapshot in time. So when you're printing it out, if you do it for the month of March, in this case like I am, you will see that it defaults to March 31st. So I'll expand that for you so that you can see that a little bit better. Up top here, you're going to see the current assets and followed by the fixed assets underneath, and then the liabilities and fund balances. So just as we described in our structure at the beginning, 1s, 2s, and 3s are on the balance sheet. Now it should make a little bit more sense when we talk about what these different components are. 1s are described as what we own. So you've got our cash accounts, we have accounts receivable. Some churches have preschools, and so therefore they have money coming in that they want to invoice. And so you can use our little accounts receivable module as an add-on to the regular accounting module. Then we have fixed assets, which you can or don't necessarily need to have on your balance sheet. Some churches have a loan or a mortgage, and typically when they go to the bank for that loan or mortgage, they need to show what their assets are, and they need to be complete about that. So that's why sometimes the land and building or the fixed assets, as we can see up top here, are included on the statement. The liabilities are next, and you can see here that we have payroll liabilities, all the things that are withheld from individual paychecks. And then down below here are current liabilities, accounts payable, pass-throughs, and then ending with the least liquid, like I said before, not easily converted into cash. You have a large obligation on the mortgage payable. Down below then, we've got our fund balances. So again, this is the distribution of the different funds that own the money. So I think one of the nicest things about fund accounting is that you don't have to have a separate bank account at the bank for every fund that you have right down here. So you can see we've got ours divided up: general, building, missions, memorials. Then we have a little preschool fund balance and a net fixed asset fund balance. What this would be likened to is your equity. If any of you own homes, this shouldn't be a hard concept to grasp. Basically, you have your land and buildings up top here. So we've got 1.5 million in our little example of our church buildings and all the assets included in that total. And then we owe our mortgage only 300,000, which is a good thing. It looks like we've got equity of 1.2 million. So basically this would stand on its own. You have your fixed assets up top, what you owe here in the middle, and then at the end, this is how much money is basically in equity over the years we've paid off on our building, land, and other fixed assets. So this is a great just way to see how you're doing as an overall picture. Obviously, one of the most important things about the balance sheet is that it needs to balance. So I'm just going to draw a little highlighter here and scroll down. See if I can scroll on my scroll bar. Nope, it doesn't look like it. I need to scroll down here. And then, so the first column here is January 1, 2011. So you can see the 1616 top and bottom that agrees with it. So if I scroll up here, yep, total assets 1.6, and then liabilities and fund balances down below. The reason I like to show a beginning balance on my balance sheet, and you're not required to do this, but it just tells you where you started from. So at the beginning of the year, you know how much money you had in the bank, and then we're doing this for the first quarter, so you can see by the end of March, we're down to $4,000. So we've obviously spent more than we've brought in, and then if we look at our general operating fund, yes, we went from $6,000 down to $3,300. What I want to do this evening is talk mostly about the building fund balance so that we can kind of follow through all the different financial statements and stick with this building fund balance. So you can see here that it starts with $33,000 and at the end of March it's down to $30,000. So we're going to track this all the way through our statements and hopefully it'll make sense in the end to you. There are some other options here on the balance sheet that I just wanted to show. In case you want a more consolidated look at the balance sheet, you can actually click on the detail tab here and take the detail off. So perhaps you're having a congregational meeting or more consolidated type of view is needed, and you don't want all the specific details. So just by taking off the detail check marks under the detail tab, you can see here in a nutshell basically what's going on with the church. So this is a format that some people like, and I just wanted to show it to you so that you wouldn't be confused. It's just really basically your subtotals without all of the line items on the statements. Great, we're going to go ahead and close down out of there. Another thing that I'd like to show is a customized balance sheet. Sometimes financial people, financial teams need or would desire to see just one of your funds with the applicable asset. If you did have a specific asset that was related to a fund, and I'm going to go ahead and show you the big balance sheet again. Again, if you take a look here up top, our Fifth Third savings account, $33,000 in it, and then it goes down to 30 at the end of the first quarter. If we go down here under the building fund balance, you can see that that money, all of the money in the Fifth Third savings is the building fund money. So perhaps I want to present a balance sheet that just shows those two amounts. What you can do is you can put specific accounts into a grouping. We call it a custom account group, and I'm just going to show you the building fund here, and we'll take a look at what that looks like. Let me make sure that my detail is checked. Yep, it is, and go take a look at this report. Again, sometimes there's a need to just present a certain fund at a time. And if you are keeping all of your money for that fund in one bank account, then this makes a really nice presentation on the balance sheet. So you're able to see here that all of the building fund money is in that Fifth Third savings. There's no other liabilities associated with it. We don't owe anything. It's just a standalone, kind of like a mini balance sheet on one of the funds. Okay, great. So basically it's a snapshot in time. You're just looking at, again, those 1s, 2s, and 3s, and want to make sure that we have a balanced balance sheet. What we have up top, the asset area, agrees with either what we owe plus our equity or what we call funds.